Joining us now with more on what this landmark deal means for investors is Bartlett Naylor. He is a financial policy advocate for Public Citizen, a Washington-based consumer advocacy group. He is also an expert on corporate governance and shareholder rights. Thanks very much for joining us tonight.
Thank you.
You must have been watching this one for a while. While it may have come as a shock to a lot of investors out there, seems the street certainly was prepared for something like this. What does the average investor make of something like this? It's hard to navigate the complexities of trading, especially as it gets more technical and so global. What is the average investor walking away from?
Well, the average investor sees ICE and the New York Stock Exchange perhaps as something to invest in, and this is what this deal is about. It's about some investors earning money if you happen to own the New York Stock Exchange. But of course, the New York Stock Exchange is an exchange, and ICE is something also. It's a clearinghouse, and that's been central to the Dodd-Frank Wall Street reform. Just to step back, the world economy struggles in no small part because of a financial crash of 2008,
right,
which took place in no small part because of muggings, if you will, that took place in the darkness by derivatives traders. Central to Wall Street reform was that these derivatives, $700 trillion worth of derivatives, be sent through a clearinghouse where there is margin and collateral. That means there's actually money put into the bet such that if people begin to struggle, the clearinghouse will make good on all of these bets and not the U.S. taxpayer. So I think while regulatory approval may be granted, the regulators need to know that ICE, the acquiring company, has the management integrity to make sure this market is a clean one.
It's a 12-year-old company, and a lot of people already have credibility issues with the way trading is done. What can you say to the investor out there to make him or her think, look, this could be something good for you down the road?
Well, I'm not in the business of reassuring investors. I'm in the business of telling investors that they need to be careful, and they need to tell their regulators in Washington to be careful. This is not something, I mean, we're not necessarily in favor of this deal. What we think that the average investor needs is a very robustly enforced marketplace, and a clearinghouse is the private sector's version of making sure this market is honest.
But to put that in perspective just a bit more, from everything I was reading earlier today, it was easier, and you talked about those dark recesses, for investors to lose money in those fractions that had been trading, and that could be changing now?
Well, it can be, but it is not necessarily the mom and pop investor, the person buying stocks, or perhaps dealing with options. It's the person whose entire market is disrupted by professional gamblers on the side who do or do not have adequate margin or collateral, who are collapsing. Trillions of dollars of investor money was wiped out when it was discovered that we really didn't have a sound system in 2008.
Great. We definitely want to have you back as this deal begins to take further shape and help us put this more into perspective down the road.
Yes, thank you.
Great. Thanks a lot for coming tonight.